Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial mysteries that shape our world, maybe a little too literally in this case. Today we're diving into a report that's got some interesting moves, a company that's a bit of a quiet operator. Apollo EG Core Replacement LP, this isn't your typical big corporate announcement, but it gives us a peek behind the curtain into how some investment structures operate. Stick around as we break down what this filing really means. And before we dive in, if you enjoy getting these straightforward breakdowns of complex financial documents, make sure you're subscribed. Also, we have a fantastic Discord community linked in the description below where we discuss these insights and more. So, the earliest event we're looking at here is the 2nd of January of 2026. This is a current report, meaning it is for significant events that have happened recently. The company involved is Apollo EG Core Replacement. LP, that is quite a mouthful, isn't it? Think of them as a specific investment fund managed by other entities that ultimately fall under the Apollo umbrella, which is a big name in investment management. They're incorporated in Delaware, which is pretty common for a lot of investment firms. Now, what actually happened on that January date? Item 3.02 tells us about unregistered sales of equity securities. In plain English, this means they sold some ownership stakes in the company, but they didn't go through the usual, more public registration process you'd see with a stock exchange listing. They sold limited partnership interests, which is a common way for investment funds to raise money. And how much money are we talking about here? Around $0.8 million. Now, for a big investment firm, that might not sound like a lot, but it still represents a transaction. They're telling us this sale was exempt from the detailed registration requirements of the securities laws, meaning they believe they followed all the rules for private sales. This is essentially how many private equity or hedge funds operate, raising capital from a select group of investors. Then we move to item 8.01, which covers other events. The big piece of news here is the net asset value, or NAV. As of the 30th of November of 2025, the investment manager figured out that Apollo EG Core was worth about $812.8 million. This is a crucial number for any investment fund. It essentially tells you the total value of all the assets the fund holds, minus any liabilities. So, all those investments they've made, minus what they owe. They've attached Exhibit 99.1 for more details on that net asset value. We'll get a chance to look at the exhibit info in a bit. And finally, item 9.01 just lists out the exhibits that are part of this filing. The main attachment here, Exhibit 99.1, is the actual statement showing that net asset value of $812.8 million as of the 30th of November 2025. They also have the interactive data file, which is standard for SEC filings. Now, let's talk about what this means. The sale of $0.8 million in interest is a small event in the grand scheme of Apollo, but it shows the fund is actively raising capital and managing its ownership structure. It's private, so we don't see all the juicy details like we would with a public company, but it indicates ongoing activity. The really interesting number though is that $812.8 million net asset value. This shows the scale of this particular fund. It's a substantial amount of money deployed into various investments. When we look at a fund's NAV, we're really looking at its performance. Is it growing? Is it shrinking? This $812.8 million is a snapshot in time. Without prior NAV figures in this specific report, it is hard to say if it is up or down. But this is the number investors in this fund would be watching very closely. Is the fund manager doing a good job of growing the value of the investments? Think of it like this. If you owned a portfolio of stocks and bonds, your net asset value would be the total market value of all those holdings minus any debts you might have. For a fund manager, their job is to make those investments grow so the NAV increases. A higher NAV usually means happy investors. Now, this report is a bit light on direct financial tables within the main body, so we're mainly drawing insights from the narrative descriptions and the stated net asset value. This isn't a quarterly earnings report with line revenue and profit. Instead, it's a disclosure of specific events. The unregistered sale is a legal disclosure about capital raising, and the NAV disclosure is about the fund's valuation. What is also notable is that they've elected to be treated as an emerging growth company. This allows them to use extended transition periods for complying with new or revised financial accounting standards, which can give them more time to adopt these changes compared to larger, more established public companies. It's a strategic choice that acknowledges their stage of development or reporting structure. Looking at the big picture, Apollo EG Core Replacement, LP is functioning as a private investment vehicle. The report tells us they are actively raising capital, albeit on a smaller scale with that $0.8 million transaction, and they have a significant pool of assets under management valued at over $800 million late last year. The lack of publicly traded securities means this isn't a company whose stock you can buy on an exchange. Its investors are likely sophisticated institutions or high net worth individuals who have direct relationships with the fund manager. So, what's my take on this Apollo G Core replacement? LP isn't a company that will make headlines with daily stock price movements. Its strength lies in its operational execution and its ability to manage a large pool of assets to generate returns for its private investors. The key risk for investors in such a fund is always the performance of the underlying investments and the skill of the management team. A high NAV is good, but understanding the trend of that NAV over time is even better. Since this report doesn't provide that trend, we're left with a single data point. An opportunity for them would be to continue deploying capital effectively and growing that NAV. A potential risk is market volatility or poor investment choices that could erode that $812.8 million valuation. In conclusion, this filing is a snapshot of a private investment fund's ongoing activities. It highlights capital raising and the valuation of its assets, which are the core mechanics of such entities for the general public. It's a reminder of the vast and often opaque world of private investment funds that play a significant role in the financial markets. Alright, that is our breakdown of Apollo E-Core replacement, LPS latest filing. What is your take on these numbers and what they signal for the company's future? Does the world of private investment funds intrigue you? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord linked in the description for more insights and discussions. Thanks for watching. See you next time.